Welcome back to the Mortgage and Marketing Update. I'm Brian DeMarie. I'm a loan originator with Union Home Mortgage and the DeMarie lending team. So it's kind of a quiet day in the news world. So why don't we talk about what it takes to actually get qualified? A lot of agents have been asking me this, more newer agents, but it always helps to get a nice little brush up. I'm going to be doing a comprehensive class on this eventually, probably next year. Haven't finished it up yet, but these are the basics. It's called the 3 C's of mortgage, right? It's credit, capacity, and collateral. This is the way that an underwriter is going to be viewing the file in these 3 basic ways, right? So think of it as a 3-legged stool. We've got credit, we've got income, and then we've got down payment. And we're going to be looking at all of these in very specific ways. So as far as credit goes, we are going to have to run their credit if we're going to be doing a mortgage application with them. Minimum credit scores are basically around 600 for FHA and VA, 620 for conventional, 640 for USDA. These change from time to time. COVID brought us up. Now we're back down to those traditional levels, at least at UHM. So don't be afraid to ask them some personal questions. Just come right out and just say, hey, look, do you mind if I ask you how much your credit score is? And maybe they know, sometimes they don't know. If they're telling you it's in the 5s, they really need something like credit repair. But don't be afraid to ask them personal questions. Remember, they're using your time. If you're going to start showing them houses and start showing them what the market looks like, you want to at least know what their timeline is going to be. So the next topic we're going to get into is going to be income. Super important. That's their capacity. This is what we use to build a debt to income ratio. It's called their ability to repay. And so we want to ask them, feel free to just ask them, what do you do for a living? You know, it's a common conversation starter. Ask them how they're paid. Are they paid on a W-2? Are they self-employed? Are they, getting tips or commission? Are they 1099? Remember, if they're self-employed, if they're 1099, they need that income for 2 years before we can begin to use it. If they're working part-time, they need to have been working there for 2 years for us to be able to use it. And if they're using, if they're getting tips or commission, if they're a bellman, if they're a bartender or a restaurant server, they need to be getting that for 2 years before we can use that income as well. But if they're traditional W-2, where the husband's a teacher, the wife's a police officer, we can basically use that income right away. So when it comes to down payment, which is the collateral part of the 3 C's, you don't have to ask them directly, well, how much money do you have? People can be a little guarded about how much money they have in the bank. So you can just simply ask them and discuss it. You can say, has anybody discussed what the costs are of buying a home? And this is the neighborhood you're looking at. Homes are at about $300,000 there. So you just take out your calculator and you say, so here we're going to put in the $300,000. If we were to use an FHA loan, which is a really common loan that we use, it'd be a 3.5% minimum down payment that has to come from your end, and then another 4% for closing costs. And so you just type in 300,000 times 0.075, and you'd say, so if you were to use an FHA loan for a $300,000 purchase, you would need $22,500 just to be able to get to the closing. And you can ask them, is that something that you have? Is that a number that you feel comfortable with? Is that something you think you can achieve? Then you can basically say from there, well, keep in mind, if you don't have the 3.5%, you can get that from a family member, and they have to be an approved family member, a parent, a sibling, a child, an aunt or an uncle. If they're using FHA, they can get that from an employer, or they can get that from a religious organization. And so you want to let them know what their options are, because the seller can pay their closing costs, not always in a seller's market, but it is an option. It is still happening on some of the deals that we're doing. But just put this in front of them. This is what the costs will be to purchase a home. How comfortable are you with this? So there are other topics we have to get into as well when dealing with this topic, as of what does it take for them to qualify if they've had a foreclosure, a bankruptcy, or a short sale. I'll cover more of that in the class, as I don't want the video to run too long, but I have an easy matrix on that. If you want to copy that, feel free to email me or text me. I'm happy to get that out whenever you have a chance to watch this video. As always, videos are backed up on YouTube. Check me out on Instagram, and talk at you tomorrow.